Today's market call is brought to you by MoneyLion, the first digital ecosystem for consumer finance, empowering everyone to make their best financial decisions. Monday, March 10th, 11 a.m. We got a market on the move here. Guy, Adami, Dan, Nathan, and Carter Worth is waiting in the wings. How are you, Dan?
I'm doing great, guy. It feels like Mondays have been volatile days of late, really in the last month, maybe since like January 20th or so. It seems like every morning on a Monday, we're waking up to a headline here or there.
You get some news over the weekend. People get a chance to digest. I thought Friday's action was quasi-interesting. I guess maybe a little square up ahead of the weekend. But as I've said a number of times, and we'll get into it today, you know, these counter trend moves with the VIX north of 25 now are going to be violent. And you saw a little bit of it on Friday. By the way, you could see some of it again today. It wouldn't surprise me to see some 30-40 handle rip in the S&P at some point today. But I don't think that necessarily will change a whole hell of a lot.
Well, it's funny, you know, we spend a lot of time talking about just the Trump administration being very aware of the stock market. We've been debating, as most market participants have over the last, few weeks or so, how much they care about the stock market, at least relative to how they did in the first administration. Treasury Secretary Bessent a couple of weeks ago said they're more focused on the 10-year yield. Well, we have that at 4.21 right here. But I guess I wonder, and this goes back to Q4 of 2018. The Fed was raising interest rates. Fed Chair Powell was the Fed chair that Trump himself had put in place, correct? We had a growth scare. Growth scares seem to be the thing right now. Are they in control? Like, could they basically come out and say a handful of things midday on any given day and cause the stock market to rally?
Yeah, we've seen it a couple of times. I mean, it would go back to last week. I don't know if it was Monday or Tuesday of last week when they talked about the auto tariffs going to be pushed out a month or so, and you saw the market turn on a dime. So there are clearly things, and it's, again, a 25, 26 VIX environment that if they were to come out and say the machines would pick it up and we could rally on the back of that. But, the broader point is, and I think this is what people are trying to figure out, is this market sell-off basically built on all the rhetoric we're hearing, or was that just sort of the final straw of a market that was clearly expensive for quite some time? And, I think that's what people are starting to come to grips with, and different people are going to have different views. A lot of people think what we're seeing now is panic. I personally, I'm not one of those people. I think the last time we saw panic was on August 5th. And by the way, with a VIX north of 60, I think that sort of cements my argument. But I think what we're seeing now is pretty orderly market participation and market selling and bounces along the way. So I'll also say this, this is something we've talked about. I'm sure Carter has views. I've thought for a while that the VIX is going to be a story. It's becoming a story. And this VIX is now no longer a one-day event. I mean, this has lasted now, Dan, for probably the better part of 10 trading sessions or so.
Yeah, no doubt. All right, let's bring him in. Carter Braxton Worth of Worth Charting, who was, as you say, waiting in the wings. There he is, Carter Braxton Worth.
How are you?
It's been a little bit. All right, so Carter, you just heard guys say that the sell-off has been orderly. And when you think of the major averages, and I know you're going to chart them, it's basically, it was escalator up, elevator down. The panic, if there is any, appears to be in some mega cap tech, in some big banks, in some airlines. I mean, it's kind of a swath of things. Talk to us. Whether is your panic antennas up right here? Does it have the potential to basically crescendo a little bit, like, not too different than what we saw from July into early August?
Yeah, I mean, as of now, obviously at the aggregate level, it's all very benign, right? The decline is 7 plus minus % from absolute peak of the 19th of February to where we are now. And internally, pretty benign too. About 270 stocks in the S&P are up, about 230 are down year to date. That's all pretty mixed stuff. But the ones that have been hit the hardest have one common characteristic: the precondition of exceptional strength. So Calmine eggs, the egg thing that's gone bonkers, that's just lost 20, 30%. Or a KKR is down to 35%. That was a preceding high flyer. So whether it's not about the type of stock in terms of the business line or sector, it's that the ones that are getting smoked are the ones that were the most stretched. The most stretched of all, and one of the biggest of all, of course, was Tesla. Most stretched, and it's the one that's been it's almost 50% off its peak or something close to that. So it's private equity, it's tech, it's even sort of low beta safety. All of a sudden, Costco's getting hit, right? And Walmart. It's where money was feeling confident, or maybe the word cocksure, right? A little too confident. That's where the selling is the most pronounced.
Yeah, and again, it doesn't necessarily feel like, I'm sure there are people, again, we've seen moves of this magnitude to the upside a number of times, and people sort of dismiss them as natural and the fundamentals taking over and the market's great. And you see a similar move to the downside, and I think the first thing people want to label it is panic. So, semantics aside, let's take a look at your charts, Carter, because you brought a bunch.
Yeah, so obviously, in terms of where we are in the S&P, where we might be headed, the one reference point is the prior high to cite in 2021, right? Do we give back all of the move to the prior peak? But let's draw some lines and figure it out together. What we know, of course, in this first iteration is that this sort of steep rhino horn thing, which is really the excess, has been broken, right? So that little poaching going on there, the rhino's missing its horn, or at least they're in the process of cutting it off, unhappy as that is in the real world. But that's what's happening right here. Now, let's take it a little further. We can flash those two because they're the same thing for fun. That's the same chart. Now, these are all judgments. Now, if we look at this, does this have to happen? No, but going down 20, and that's, again, plus or minus, we can't know exactly where the blue line comes into play, but that would be nothing. We had the COVID sort of sell-off is obviously force majeure, right? As defined, an act of God, so to speak. It is out of nowhere. The 2022 bear market, on the other hand, is very much just a regular, proper sell-off. The Nasdaq 100 dropped 37%, S&P dropped 27%. And so just simply going back to the trend for what it's worth, the trend that's been in effect since the COVID low, we would have a reset of 21% plus or minus. And that's a perfectly reasonable sort of roadmap for those who believe we're going lower. I mean, there are plenty of people who think it's all going higher, but I don't. What else might we have here? The Nasdaq. So here too, this exceptional, it's a doubling, right? 1,000 to 2,000 or thereabouts. And now we're breaking trend, as all will know. And do we get down to, that seems like a long way, but if we put in the percentages, we might have them here. I don't know. Not really. It's just in line with what would be beta adjusted. It's in line with the S&P drawdown, right? There's more beta here, and in many ways cyclicality. There are no cereal companies in this, and there are no beverage companies in this, so to speak. And this, why not?
Yeah, Carter, let me ask you this about 2021, because you just mentioned it. And again, if we were to get back to, that high from then, what was to me really different about the back half of 2020 and 2021, it was just like, it was a market environment that we've really never seen before. When you think about the decline that we had in March of that year, and then the full on when the fiscal kind of kicked in and monetary went to zero, and then the SPAC thing turned on, and then crypto was a thing. That was an all out dash for trash, in my opinion.
Yeah, and that still is the breadth peak, interestingly, for the Russell 3000. We know that the Russell 2000, right, has never exceeded that 2021 high, because it was all of those things that Dan, you just said, this whatever all that is, SPACs and schmacks and sugar smacks, and it's just all nuts, right? But the question is, that was one of the broadest moves up, right, in that 20, for reasons that are obvious. And the expression, of course, is that correlations go to 1 in down markets, which is true, because when people sell, they sell everything. And that's not the case in up markets, but it is the case from a ricochet after a crash, right? So everything was moving up in 2020 because of the whatever government inducements or whatever, but we were aggressively, and not only was it high quality, but it was low quality. It was everything, all stocks up, just as all stocks had collapsed. And there's no reason. Maybe we could put up the Russell 2000 just to put this in relief. That 2021 high is still the reference point. And so this speaks to the issue. There it is, right? It's late 2021. And most stocks, if you look at all the constituents now versus then in the Russell 3000, fully 40% of them are still not above their 21 high. which is just what we all know. It's a few leaders and a few areas of the market that have really pushed the market, as defined the S&P 500, to these big new highs.
Major double top into Russell. If you put that up real quick, we've actually highlighted that a number of times, and we pointed out how problematic that could potentially be. And, one would think, and we're going to talk about yields in a second, but, with yields going down, theoretically would be supportive of small caps, again, the most economically sensitive, and theoretically the names that would benefit the most from lower yields. That's clearly not happening. But, real quick, if we put up an NVIDIA chart, because why not, in terms of the Nasdaq? I mean, people say we're haters. I will tell you, and that's a longer term chart. Over the course of the last year, we've pointed out now on 3 separate occasions, Carter, this engulfing pattern. First one, I think, happened in March of last year. The stock, I think, subsequently went down about 30%. We saw it again in June of last year. I think the stock went down about 35%. And now we're in the midst of one now on the back of the day after earnings, when the stock made an all-time high of 153 and change, closed lower. And, outside a day or so, we never really took another look at it. I will tell you, in terms of that Nasdaq chart, that August low, if Amanda wants to draw a horizontal line across those bottoms, I mean, to me, that's sort of potentially where we're headed. People like, you're out of your mind. Well, yeah, that's probably true, but for a number of different reasons, I think we're getting there, and then you sort of draw the lines as you want in terms of the Nasdaq. Let's take a look at yields, as I just mentioned, because yields are obviously a story, I think, for the wrong reason, although it doesn't matter. You've pointed out 100 different times and 1,000 different ways how effectively yields are exactly where they've been for the last couple of years, and they don't matter nearly as much as people like me say. And you wind up being correct. But here are the charts that you brought with you, and you seem to think that this uptrend that's been in place since 2019 or so is going to be tested.
Yeah, I mean, that would just be normative sort of sequencing, and the main thing is, of course, we never once closed above 5%, and the notion that somehow 4.8 or 4.4 or 4.5 is high cost of capital, it's just not, right? The higher for longer thing, absolute nonsense. And now what? Now one could say, well, yeah, but what about when we have a debt crisis, and then we have people abandon government debt, and all of a sudden treasuries are 7, 8, 9, 12%, we're a banana republic. Okay, that's down the road, and that's perfectly possible. Who knows? Happened to Rome too. But anyway, the question is, are we going higher or lower from here? And I would think lower is and that's what is different, right? Not that rates are going lower. It's just that we've got lower stocks and lower yields. And that is a generally negative thing.
Yeah, it is interesting. Oh, excuse me, easy for me to say. It's interesting to see, that prior high from 2018, and if you get down towards that uptrend, it's probably in and around that. Carter, you made this point on many occasions. I mean, look where we are right now. We're basically trading where we were at the highs in 2022, and I'm kind of in your camp. I just right now, other than some of the technical stuff, and Guy knows a lot more about that than I do, about issuance and kind of what our foreign buyers are willing to pay and the yield, like that all makes sense to me. I don't have that sort of macro mind, but I just look at the here and now, and I think about the increased potential for a recession. The Fed, well, at least the Treasury Secretary is more focused on the 10-year yield than they are the stock market. Again, that might be one of those narratives that you want to take the other side on. For me, I am also in the camp, though, that Guy says in the near term, if yields do go lower, careful what you wish for. So again, appreciate that, Carter. We're going to let you go. We know this is a busy day for you. We appreciate you popping in here. Hopefully we'll get to see you really soon. That's Carter Braxton Worth of Worth Charting.
Good looking shirt he's got on, that red shirt. I should have worn red today.
Well, you have your Hudson, you have your what is the H there? It's
it's my little pullover. It's like a rain top, but it's not rain. It's actually a beautiful day.
By the way, you make fun of me when I wear the Wall Street a-hole vest. You oftentimes, and you don't like the golfers, and you don't like that is a golf pullover. Let's be really, really clear about that. So I don't get all up in your grill about your fashion choices.
No, it's fair. Good point. I mean, I'm just wearing it because I had to be out early this morning and do a couple things in the midst of a March morning. But
not
Julie
judging, making an observation, as Carter would say when he looks at a chart. No, what does he say? No, something.
No judgments.
Yeah. All right. Here's something that I think is important to the market. Amanda helped us put this together. It's the whole notion of the Trump trades. And this is something that I think is important from a sentiment standpoint, especially on days like today when we see, the S&P down nearly 2%, the Nasdaq down nearly 3.5%. Guy, we don't see too many days like this in the market, but these are really instructive, in my opinion. If you can go look, and we've talked about Tesla, it's been cut in half now since the election. It's down 4%. Bitcoin is almost getting to the election sort of levels and is down, considerably from the recent highs. Coinbase, this is flat. Okay, this is one that, the SEC has dropped suits against them, and it's down 45%. Let's look at the regional banks. This is one that we're meant to benefit from, deregulation and possibly consolidation, down since the election, down 20%. And then if you look at just the US dollar, I think this one is really important because that whole notion of US exceptionalism, and that was something that, had a huge run as it looked clear that Trump was going to win. And then after the election, and look at the way that's fallen out of bed. And then, look at energy here, which has kind of been stuck in the mud. Which one of these really sticks out to you as almost, or one or two that's almost the most important from a sentiment standpoint?
All right, so it's interesting. Lower dollar actually is something that they want, although they won't publicly say it. I mean, they've talked about, President Trump and his prior administration talked about how the dollar was too strong. And it's that old saying, if I owe you $100, I have a problem. If I owe you $1 million, you have a problem. And it's true with the debt that we have. And again, if you can devalue your currency, you can sort of inflate your way out of that problem. So the lower dollar makes sense. Although I'll say this as well, most people in their wildest dreams didn't think we'd see the weakness in the dollar that we're seeing. I think part of that's predicated on some of the things that Carter just talked about, the fact that we do have a bit of a debt problem. So that's number one on my list. But number two, I think for most people has to be Bitcoin, because people were sort of wringing their hands in anticipation of this reserve, this Bitcoin reserve. And it was when it was announced, we would be off to the races. And quite frankly, that obviously isn't the case. It was announced, I think, on Friday, and you see where we're trading now. We are at critical support levels here in Bitcoin. So, if you're a Bitcoin or a fashionista or a hodler, you better hope we hold here. Otherwise, I think that sort of 72,000 is in the cards. Now, 72,000 is a level that we had trouble with on the upside a number of different times. Now, the optimist will say, you know what? I mean, this is just a typical Bitcoin move. Maybe, but the question you have to ask yourself is, what's the next catalyst? Because I don't think it's going to come in the form of any announcement from the government. So that's the way I look at this thing. $1, Bitcoin 2, and if you want to throw Tesla in for good measure, Tesla 3 down 50% since its high a few, basically, month and a half, 2 months ago.
Yeah, and one thing about Tesla is really interesting. It's been kind of one step forward, 3 steps back. Like some of those, counter trend rallies or those intraday reversals just haven't been that strong, right? So you have a day like today where the stock is down 8.5% or so. It is down 8.5%. And, tomorrow, let's say we get a rally, it's not going to be up more than 8%, in my opinion. It'll be like up 4% or something like that, right? So it's 1 up, 2 down sort of thing. At some point that will flip flop. I think this stock and all the gaps that it has filled in, I think it goes back, Guy, and it fills in that. See that double gap from October? That was earnings, and it was a robo-taxi event, and it was deliveries, and there was a lot of volatility around that. One thing is really clear is that the fundamentals are not getting better. You throw in Elon Musk and basically the support in Germany for a right-wing candidate that did not win. You think about China and how conflicted he is there. You think about Starlink. And again, these are, related to the Trump universe, if you will, but they're all kind of related. The Starlink thing is huge, in my opinion. It creates a level of basically uncertainty about the man and his power. And so I just think that one of the major ways that voters can vote on his, involvement in what's going on from a geopolitical stand is Tesla. You know what I mean? They cannot buy the cars. And when you think about the fundamentals, I mean, here's a company that has auto margins that are in line with that of the major automakers. And here was a stat that I thought was pretty fascinating. With Tesla now worth $845 billion, and that's less today, it's probably $800 billion. It still tops the next 9 most valuable major auto companies combined, which collectively sold 44 million cars last year. Tesla sold 1.8 million, and that is basically flat to down year over year. Consensus still has that to be up to about 2 million cars, that is not likely to happen. So again, this one's fascinating to me because it's taken all the froth out since the election. And again, that stock nearly doubled and now it's been cut in half. And I think it has lower lows, Guy, on a fundamental basis.
240 is something we've been talking about. Well, here you are, 240. So yeah, I mean, could it grind lower from here? Absolutely. Can you see counter trend rallies? And we've seen them before a number of different times. But to your point, the fundamentals line up. Now, people will watching this will say you can't compare Tesla with the legacy automakers. It's more than that. It's a technology company. It's an energy company and all those things. Robotic, the robo taxis, autonomous driving. Yeah, I get it. But even with all that sort of lumped on top, the valuation still doesn't make a lot of sense. And when you saw those last margins that they reported during the quarter, those were 5-year lows in terms of margins, and margins that they almost promised us we wouldn't see going forward. So, we'll see how it plays out. And you're right. There are obviously a lot of people out there that I think for a myriad of different reasons are not buying a Tesla. So that's that. And I think it is a big sentiment stock without question. But there are other things going on as well. And we'll take a look at sort of the chart of the day. I mean, you talk about places that are vulnerable. Well, the DC, which you have 2 kids in school down there, and I spend a lot of time in DC, I think 9 out of 10 government workers, I want to say, live in and around the DC area. And what you're seeing over the last month and a half, 2 months, is a precipitous decline in their real estate market. And I think that's sort of the tip of the iceberg in terms of the real estate trade. And I think it could have potential trickle-down effects. But we wanted to sort of point this out because it is interesting to sort of look at here, Dan.
Well, yeah. And so Friday, we saw the unemployment rate tick up a little bit. And, some folks think that, or economists, by the end of the year, you might see, 1 million federal workers that are affected by a lot of these job cuts that are being, kind of implemented by DOGE, a level of austerity in this country, something that we haven't seen in a long time, is likely adding to weak consumer sentiment. We're going to get a reading on that on Friday afternoon. But what really stuck out to me, Guy, about this kind of image here is that when you get outside of DC, look at a lot of those darker purple pockets. They're in a lot of red states, right? And when you think about red states, a lot of these, Congress folk, they want austerity. They want less government spending. But I've also read headlines that a lot of these Congress people don't want to go back to their districts and do these town halls because they're getting a lot of, crap from their constituents. So I think this is something that's likely to play out, especially as you have inflation that's kind of stuck here, not going meaningfully lower. You have an unemployment rate that's going a little higher. I think a lot of the trade war is going to affect people in the middle of this country. You already see these tariffs that the Chinese are putting on our agricultural products that are going over there. And so when you think about costs to Chinese consumers that are already really, really strapped, they're going to go up by 10% for general purpose, needs and stuff like that. You might see a huge pushback. Now, the other last point I want to make is that over the weekend, you saw these Canadian elections. They just voted for a former central banker who has become emboldened, right? And they said they're going to leave the retaliatory tariffs on. So you put this together with what's going on our northern border with, we don't even know what's going to go on with Mexico. And we know that Europeans are becoming more emboldened, not just about the tariffs, but also about our lack of support for NATO or Ukraine, that sort of thing. It makes for a very messy picture, which one headline out of White House does not fix, Guy.
No, it doesn't fix, but again, for a day or two, it can assuage concerns of market participants. Is why you see sort of these counter trend rallies. And again, with the VIX at 26, it's inevitable that you're going to see them, and you might well see one today. But again, I don't think that changes anything. I think what's happened over the last couple months is this is sort of the last straw in terms of valuation and all the things that have been concerning the market. And I think finally we're starting to take starting to take notice. The other thing that I think is really interesting is if the economy was as robust and as strong as pundits say, then you'd see it in the banking. Pull up a KRE chart, Dan, because we're seeing anything but. And again, talk about favorable yield curve. You talk about lower rates are favorable. Well, it's not happening here in the KRE. And if you throw an IWM chart up, and we showed you that double top, it's going to look remarkably similar. And this to me speaks to the underlying weakness of the economy and potentially the consumer that up until now nobody's willing to admit.
Yeah, I mean, this is one, and it's not just that. It was the whole promise of deregulation. I mean, we found it absolutely astonishing on November 6th, the day after election. KRE gapped up 10%, or gapped
Mhm.
up like 6 or 7%. And again, it consolidated some of those gains. It made a new high when there's still euphoria. The pace in which it filled in that gap at the time, it should have been something that alarm bells were going off. Let's pull up the BKX for a second, because this is a sector you and I have been talking about for a while. The major money center banks, which really folks got really excited about. Citigroup was a great trade. I know that was one that you were pounding the table on when it was much, much lower on valuation relative, let's say, to a JP Morgan and relative to, let's say, a Wells Fargo. Look at what's happened here. I mean, from a technical standpoint, contending with that 200-day moving average. But if you look at some of the components in there, many have filled in the gap from November 5th. JP Morgan's still a bit higher, and that's one of the larger components here. But banks are almost more important to me, Guy, than some of the stuff that we just detailed, the Trump trades, and then also mega cap tech, because this is much more a reflection on what folks are pricing in for the U.S. economy.
I agree. And as much as people think it's different this time, banks are extraordinarily cyclical and they're not immune from a potential downturn. And by the way, we're not even talking about, I say it all the time, I'm not an economist. So I don't know if we're in a recession, out of one, about to be in one, doesn't really necessarily matter to me. But, banks are trading this way in an environment where we're clearly not in the midst of something. At least nobody's willing to acknowledge that. So the question one has to ask is, what does it look like if, in fact, we do have a significant downturn? So banks are extraordinarily sensitive. They're extraordinarily cyclical. And finally, some of that cyclicality is playing out in terms of the index and the indexes that we look at in individual names as well. The other thing we have to look at real quick is energy, because, this was, I think, a trade that a lot of people thought would work in this new incoming administration. It's clearly not working, again, for a myriad of reasons. And I think one of the reasons is because obviously the underlying commodity is not doing particularly well. And I think there is a concern, again, an economic concern of a downturn. So the XLE, which has just been, a whole lot of nothing now for a while, fits and starts, maybe we trade back up to 90 or so, which is the moving average, and that's been sort of ground zero. But, this is one that I'm sure has disappointed people.
Yeah, no, we just mentioned, so these are all a bit more cyclical. They're all a bit more a reflection on the outlook for the U.S. economy. But let's go to the Fateful Eight for a second, because one of the worst acting stocks today is Meta. Meta was a stock that people could make an argument on just how their integration of generative AI for their own business, right? Their plans that they have for Meta AI across a whole suite of products, not just software and services, but also this Meta AI, these glasses, and how you can kind of see them move into AR and VR. To us, that kind of melt up just seemed really ridiculous. Valuation was getting a bit more expensive, Guy, into their print. They gave some very big CapEx guidance, but this is also one of those ones. If you put, Elon Musk in the Tesla situation here, I think a lot of folks might think differently about some of the changes that they've made. Advertisers could think differently. A lot of users could think differently based on Mark Zuckerberg's turn a little bit. And here's one that I think is really fascinating. Mark Zuckerberg, who's obviously into this UFC stuff, he put Dana White, who's the head of UFC, on their board. Dana White, if you just Google him and wife, this is a guy that a few years ago was at a club in Las Vegas, I think, there's a video of him slapping his wife in the face. Now, you and I, you're probably a nice religious guy. The whole idea of judging somebody off their worst mistake, you know what I mean, is not something that I think is particularly charitable. But man, that guy is going to be chosen by the CEO, has super voting rights, who's going to be put on the board of this company. I just think that we're probably in the crux of a backlash against some of these big companies, not too different than what we've seen from Tesla. Not exactly a political conversation, but we hear this all the time about folks able to vote with their wallets, right? And you might start to see that despite the valuation, despite how these guys are using generative AI and the like. So just curious, as you think about a name like this being sold off on valuation, a name like Google being sold off on valuation, and these are cheap stocks in the space.
Yeah, well, I look at it more in terms of, how again, they're not immune or impervious from downturns in the economy as well. And both of them, both Facebook and Google, if you think about it, I mean, they're economically sensitive names, because these small and medium-sized businesses that do ads, I mean, if they start to feel the pinch, I mean, what's going to happen. I mean, inevitably it'll trickle down to Facebook and to Google as well. Now, if Amanda wants to put up a long-term Facebook chart, go back to like November of 2022. I think it was a $90 stock. I mean, we've been in a very significant uptrend. You want to draw that line? I mean, we are right at it. And by the way, it comes in right around the moving average as well. So you can see exactly what we're looking at here. But to your point, basically, I think 590 is where we're trading now. I mean, this is where we started around the election, I think, right? I mean, I think this is where the election price of Facebook was at the time. So I don't know if you can draw. It doesn't matter because it's going to look just like the 150-day, or excuse me, the 200-day moving average, but you get my drift.
Yeah. So here's a name that, you know, you and I have not been haters on. But
yeah, there you go.
We just kind of well, look at that. We've been pointing out for a while that the fundamentals, in our opinion, have been divorced a little bit of the price action. Now, the first half of 2024, Apple could not get out of its own way. We learned after the fact, some point in Q3, that, you know, Warren Buffett was selling all year long up until about June. And I think they said they were going to stop. You see that this stock was not participating at all with this generative AI trade for two reasons. They didn't have a product, A, okay, and B, you know, this was one where when you have a massive seller like Warren Buffett, who's one of the largest holders, you know, it's going to be hard for this stock to rally. You and I have drawn this chart, and we've drawn it a couple times, right? You see that uptrend, and then you see the way it bounced off of it late last year after the election into this new year. One of the reasons I believe there was enthusiasm, A, about you know, the fact that this company was going to actually be able to launch Apple Intelligence in its full at some point, but then also because Tim Cook had done a really nice job in the first, nice job if you are the company and their investors, of carving out, and U.S. consumers for that matter, you know, Apple iPhones from the tariffs that were existing, right? These phones were obviously made in China. So the idea was that they're going to be able to do it again. Well, the stock still, on a relative basis, acts very well over the last few months, right, to the Mag 7 or Faith Late or whatever. Now, let's pull up this call of the day from Citigroup. And, you know, as bullish as all of these analysts were going back to June after WWDC and the idea that AI or Apple Intelligence was going to be a huge driver for an upgrade cycle, it's interesting that you're seeing some of these analysts kind of pull back a little bit. And Apple has a very different makeup as it relates to the sell side. You know, most of the names in the Faith Late have literally 85% of the analysts that cover it as buy or strong buy or something like that. So when you think about Apple, even on a relative performance basis, you know, this thing, in my opinion, based on valuation and catalysts, it should be much lower, guy.
Well, you know, you want to throw up an Apple chart real quick, and you see the different price targets, and the fact that they're 14 holds, I think is interesting. But, you know, you go longer term, I think it was June 10th, the stock closed that day at 193. That was their whatever, I don't know what the hell they call it. I mean, I'm not that interested in it, but Developers Day. Gene Munster came on Fast Money that night, and he talked about it being transformative. I'm probably using the wrong word, but something along those lines. And from the next day on, the stock went from basically 193, made an all-time high. It really surprised me. I think it obviously surprised you as well. But I've said now for a while that, you know, valuation, you really can't make a compelling case. Margins have been basically flatlining for a while. They are not impervious to a downturn in the economy. They have issues when it comes to China, without question, despite the fact that Tim Cook will try to assuage those concerns. And I do think we're going to round trip the entire thing. So, you know, I think we're going to go back and see that 193 level that we started this whole charade from in the first place.
Yeah, and I think charade's a great word because there's a lot of goofiness that's gone on. Even if we look at some of the fintechs, and you know, we were talking about like Affirm and Carvana. These were names that were literally left for dead in the lows of the 2022 bear market. And because we just had this sort of like dash for anything that was working, you know, if you think about, you know, where was the alpha in this market, it was going after, you know, some stuff that we know had the potential to be really squeezy, high short interest. I just want to highlight three charts before we get out of here, guy. One would be the Palantir, because these were, to me, the meme stocks that kind of encapsulated. They were kind of the ones that we go through here. They were kind of this late to the party generative AI stories. And a lot, just think about that. Look where that stock was below $25 a year ago, got up to 125. So this was clearly a Johnny come lately. Then I want to go to the app lovin'. Okay, this is the APP. This is one that just astounded me. Okay. And look at what's happened here, where it was a year ago. And not only did it fill in that recent gap, it's going for that other gap from the election. Okay. I don't know why this stock traded well in the election. It must have had earnings right after. And then the last one is Reddit. Okay. I'm sure these are all, as you would say, lovely companies. I'm sure they are. But what got a little silly was what investors were willing to pay for them. And I'm not even coming at the companies. You know what I mean? Like, yeah, they added some generative AI story. And that's one of the reasons why you saw an acceleration in the quarter, an acceleration in the guidance. But look at the way these things had quietly moved up and the way it's coming off. And I'm just curious, do you agree with that sentiment about these major meme stocks? And these were not small market caps.
No, they're not small companies at all. And we found ourselves scratching our heads, and people actually castigated us on different social medias when we talked about Palantir as it got up through $100, saying that it didn't make a lot of sense. And again, and I get it, people that are long things, they want those things to continue to work in their favor, but if you don't point out the absurdity of the valuations, then you're not doing anybody any good. And it's not to suggest it can't last, because it clearly did with all three of those names. But at a certain point, valuation does matter. And I think with all three of those and a bunch of other companies as well, valuation is starting to obviously come into the forefront. And that's with rates going lower. So there's clearly a bit of a growth scare going on. Obviously, some of the rhetoric out of the administration is scaring people or scaring market participants. But again, with a VIX north of 25, which I think will remain for the foreseeable future, you are going to see moves to the downside that's scary and significant moves to the upside that are equally scary. And I think people are going to be quick to try to call a bottom. But as Carter pointed out in one of his original charts, I think the bottom in terms of that uptrend line is not that close to where we're currently trading.
Yeah. Last thing, Amanda had a little bit of a table of performance of Europe and China, or at least the Hang Seng relative to the S&P 500. This is from Bloomberg. This is not something that we have seen too often over the last, call it 20 years. You would agree with that? The S&P underperformance, and part of it has been, how many times have we heard strategists come on and say, Europe is so much cheaper on a relative basis. Yeah, they have some structural issues, or, China, obviously major structural issues. And so is this a bit of a, I know you're not a soccer guy, but is this a bit of an own goal? You know what I mean? And maybe, do they use that term in hockey too, an own goal? I don't know. That's something that you would,
I don't know what that means.
Well, it means that your team, you score a goal on your own team by accident, right? If you're
that happens in soccer.
Yeah, if you were defending, let's say, and Bill would know this, if you're defending
and you try to kick the ball back to your goalie so he can, and then he whips on it. Yeah,
but maybe you're defending like a corner kick, and everyone goes up with it. They go up and they try to head the ball in,
and then is that the same sport where they go down like they were shot by a sniper's rifle and writhe in pain on the ground and get carried off on those little stretchers, only to sort of emerge 5 minutes later like nothing ever happened? And then the guy with the little short pants with the whistle holds up either a yellow or red card signifying some sort of offensive play. Is that the sport you're talking about?
Exactly. Yesterday, I was watching Arsenal, Man United, and Ellie Ellie was home, and Ellie was taking issue with the flopping too. Okay,
so soccer sucks. Soccer is a shit sport. They've ruined it. No, because it's you see hockey players, and Bill can speak to this.
Well, Bill's moving his mic. Bill wants to speak to it.
Let him speak, because you see hockey players get teeth knocked out. Yes. Things that, there was a guy playing in a Ranger game last night that had his jaw broken. He came back 10 days before they thought he was going to come back. Playing with a full face mask. You think that's happening in soccer?
No.
Holy shit.
No.
To compare those two sports, if hockey is a sport, to call soccer a sport is insulting.
Yeah. I'm with you.
Soccer might as well be professional wrestling, quite frankly. I know these are the greatest athletes in the world. Yeah, maybe. But they're also the biggest pussies in the world as well. There's not a tough one and if there are any professional soccer players watching, have at it. You know where to find me. But man, oh man, at gunpoint, you couldn't get me to.
So going back to that,
you brought it up.
I
did. You talk about own goal or something. It's like,
I did.
And then they put their hands up and and then the coach on the sidelines and the stupid chants.
I love it. So how often have we seen this, right? Europe and China outperforming the US. Now, I'll just mention this, the EWW, which is Mexico, last year at this time was trading above 70. It's at 50 right now, so it's down nearly 30%. If you look at the what's the EWC, that's Canada, guy. Oh, Canada. It's down about 8% or so. So North America is in the shitter. But Europe is being perceived as value. Thoughts just internationally, because I know you've been in the China trade playing it off the lows. Sentiment was really bad. And if you think about stimulus, it's going to be there to support a consumer, which is why you've been interested in some of the e-commerce names. But also maybe if you think about an Alibaba, there's been rumors if Apple can ever get their act together with Apple Intelligence, that they will be the cloud provider and probably the model provider for Apple Intelligence.
Yeah, so
that's only important because there's 350 million iPhones in China.
So Europe's been an underperformer for a couple decades, and there are a lot of people. Lori Calvasina of RBC Capital was on Fast Money, I think on Thursday or Wednesday of last week, and she said, she thought we're in the very early innings of the European trade, and Tim Seymour agrees. I will tell you, with a weaker dollar, that's very supportive of emerging markets like Brazil, for example, and some of these other names. And I think they're going to get off the mat. In terms of China, I mean, their economy and their stock market have always been sort of divorced of one another. So I can't speak to their economy. I can't speak to the stock market. I think it's going to surprise people. And moving the FXI and a move on Alibaba, up to 145, we're pulling back a little bit here. I think that's one that will continue to surprise people to the upside. So weaker dollar is going to be very supportive of all these trades.
Yeah, no doubt. All right, we covered a lot of ground here, Guy. Just a couple.
And soccer. And people are going to say you're offending people. I don't really give a shit, to be honest. I mean,
you know where to find them. But here's a little housekeeping. And if you want to
wear their Tottenham Hotspur jersey to the pubs on Sunday mornings with your lads, I mean, oh my effing God.
By the way, speaking of lads, Sarah
people and I do that. I mean, there are bars in the city where people go and they get shit-faced at 9 a.m. so they can watch some shitty soccer game that ends in 1-0.
So, guys, do you remember when you just said people know where to find you? On June 5th, do you know where you can find Guy Adami and Dan Nathan for that matter? But Guy is so much more popular among the Fast Money fans. We're doing another live event at the Nasdaq. You go in there, you figure out how we put the show together. You go in there and you basically get to do a watch party. Afterwards, we come out. And so, we do a Q&A with all the folks. People were so geeked up when we did this 2 weeks ago. Then we had a cocktail party. We got to chat with people. There was a lot of really cool gifts. So go to the CNBC site, sign up. The tickets are moving fast. We had a huge wait list look at those good-looking people right there. Why am I not on there, Guy? What's going? Oh, you have to show all there. Oh, look at that guy. So we'll all be there. A lot of fun. It was a great event. So go sign up there, register, and go down and see the gallery here. This was the last event here. Look at that. It was a massive audience, a lot of fun. Go check it out. Sign up.
People are so cool. I mean, nobody wanted to sort of take me on in some of my hot takes. People are so gracious and kind, and I'm looking forward to the June 5th. And so you can cut that and snip it there. Pause. Okay. It's one thing if you live in London and have shitty teeth, if you want to say, let's go have a pint at the pub, mate, that's fine. You live there and you knock yourself out. But if you have braces and live in New York City and are saying the same things,
by the way,
hey mate, let's go get a pint and watch the Chelsea game.
So you're saying for the third annual trip that myself and a whole group of guys did to go see a Premier League game in January, you're not going to be on this year for the third one in a row?
When is it?
It's MLK weekend. So this will be the third annual. Last year we went to a Chelsea game. This year we went to an Arsenal game. Maybe next year we'll go to a Spurs game, Guy. Who knows?
Whoa.
Okay. And then tomorrow morning, it's going to drop.
Wear my jersey? Do I get to wear like my Cantona jersey?
Nobody wore jerseys.
And hope that like the coach looks up in the stands because one of his players was shot by said sniper and needs a striker to score a tally or not get an own goal.
Yeah.
Jacob is saying something now. Oh,
He's-
kits. It's in football. Kit. I don't
yeah,
know what
it's a
the
full
fuck
kit.
that means.
It's a full kit. So we fired up guy.
Yeah,
We
do
didn't.
you think they know they're embarrassing when they do that? Like when they writhe in pain on the ground? Or do they think, like, do they know they're being made sport of and made fun of by assholes like me? Or do you think they actually feel there's some machismo associated with it?
I think they think they're laughing all the way to the bank.
No. Listen, absolute. You know, as my people say, Mazel Tov. I don't begrudge anybody for making money.
By the way,
Man, oh man,
you
I've
you
done things to myself. I mean, I've snapped fingers and cracked ribs, and you
wow.
don't see me writhing on the effing ground.
No. What do your people say? Because you joke about that all the time. It's my people say Mazel Tov.
Yeah.
What do they, half Italian, half Sicilians? What do they say when you're trying to give somebody a shout out? What's the thing?
When you
What do
try, I was going to say they say go fuck yourself, but that isn't what. No, what
Wait,
do they
is there
say?
like something fungal? What is that? What is the thing?
Yeah.
What is that? Do you speak Italian, by the way, or no?
My son does, who's sitting probably 20 feet from you right now. He could live in Italy. I do not. So I was born in 1963, as you know.
Yep.
Back then,
December
parents
18th.
didn't want their kids. They wanted to assimilate. They wanted to put their kids in and be part of, the culture. So speaking a foreign language was frowned upon. They wanted their kids not to speak the other language. Now, obviously, and rightly so, it's something it's very important, I believe. So my parents both spoke Italian, but they spoke it when they didn't want me and my brothers and sisters to know what was going on.
Oh, I love that. Kind of old school stuff.
Yeah.
All right. I think we should probably get out of here.
Amanda's, I'm sure, is not happy.
It's fine.
Listen, just for the record, though, I want people to understand, I didn't bring up soccer.
Yeah, no, you didn't. You didn't.
Right?
That's fine, guy. The people.
Amanda's parents did that too. See,
Yeah.
Amanda knows.
With the Spanish. Well, all right, guy. We covered a lot of ground here, my main man. It's just a recap today. The S&P right now is down 2%. The Nasdaq is down 2.7%. The Nasdaq 100 or 2.9% in the cash. The 10-year is trading at 4.22. Crude oil 66.5. That's kind of a big level too. We've been talking about this kind of 65.5. We have a VIX that is not exploding, guy. It's up 3 to 26.35. We have the Dixie, which bounced a little bit. It's like 104 here. The Bitcoin at 80,500. You break this, you probably go right back to your 72,000 sort of level. So lots of stuff to watch. And then it'll be interesting. You said this earlier. Didn't we start the show? You could see a 30, 40 handle rally. And then it really what happens
easily. Easily.
Yeah.
And the other thing, real quick, dollar yen's the story, traded below 147. I think more and more people are going to start to talk about that without question. And, the fact that the VIX is just sitting here, I don't know, that actually is probably a bad thing. I think if you're bullish, you want to actually see the VIX spike, maybe go north of 30, and maybe that will be some sort of capitulation. But just sitting around here, I don't think it's necessarily a good thing. But we'll see how it plays out.
Yeah. All right. Well, guy, there's still a fixture tonight, and they run it on the NBC and Peacock. So if you want to check that out, they're 5 hours ahead of time. So that might go on this afternoon. I can't remember who's playing, but I saw it yesterday. A fixture. They call the games fixtures, guy, in the EPL. That's the English Premier League. So on that note,
I mean, they call it a fixture. I mean, are they that enamored with themselves?
Yeah.
Fixture of what?
West Ham versus
Newcastle. Call it a fissure.
Jacob just said West Ham versus Newcastle. I actually went to 25 years ago when I lived in London. Every time we'd have guests come in, they all wanted to go to an EPL game, right? So every once in a while, you didn't have the London teams. You didn't have Chelsea. You didn't have Tottenham. You didn't have Arsenal in town, and you'd have to go outside. West Ham is just outside of London. So I went to a West Ham game once. That was a roughed up town. But one of the things that's kind of interesting, and again, all these towns have been gentrified a bit. They all now have these billion-dollar stadiums. The only one that doesn't, Chelsea, that's one they want to kind of fix up a little bit. But who knows? They have some U.S. private equity owners, the Clear Lake Capital, the Todd Bowley of Eldridge. All the American guys are going in there. They want to own these teams, guys. So on that note, check out tonight's fixture. It's on, I think it's on one of the NBC Universal channels. It's West Ham versus Newcastle at West Ham. Guy Adami will not be watching, but check us out tomorrow morning.
Landman's a good show. Have you seen Landman?
I love it.
So I think the last episode, Billy Bob Thornton is in a chair. He's got a bag over his head, and the guy that's torturing him gets a nail and with a hammer and drives it into his thigh.
Spoiler alert.
Yeah. That's what I'd do with the nail and a hammer to my nuts instead of watching this game tonight. This fixture.
Tomorrow morning in the Risk Reversal podcast feed.
You think I'm kidding? I'm not.
Check it out. Mark Mahaney, Evercore, internet analyst. He's a legend in my book.
Is Bill laughing, by the way?
He is laughing. Check that out in the feed. We'll see you back tomorrow, 11 a.m. for the market call. Hopefully we'll have a better market environment to speak to because today is downright nasty, but we'll see you tomorrow. Thanks a lot.